Well, we're going to get rolling here this week. We've been volatile but sideways, and that seems like that's been the trend here the last couple of weeks. So we don't have anything just really profound in here to point out this week. We just want to highlight a few things as the next couple of weeks we think are going to be really important in here, for the grain markets. The first thing we have up here is a December corn chart, and the two horizontal red lines is 525 and 575, and that's the price since June 1st. And even though we have a lot of day-to-day movement, which was highlighted by yesterday's 14-cent up move in the market, today giving some of that back, corn has been relatively stuck in this 50-cent range over the last 2 months, okay? And even over the last 3-4 weeks in here, that range is even more narrow. And it just seems to us the market is content to stay in here, and it is going to break out. We don't think it's going to really break out in here, though, until we probably get closer to mid-month, and we'll have something on that here later on the presentation. When we get over to the bean side of it, it's the same thing as corn, maybe a little wider range of about $1, between $13 and $14. But just like corn, we might move a lot day to day, but in the big picture, we're really not going anywhere. Again, the end user needs to be concerned about the breakout to the higher side, but the producer needs to be concerned, well, what about if we go below $13 and accelerate down? Again, the weather and the reports coming up in here in the month of August, and the weather is going to really be the determining factor on soybeans. The market that has broken out recently is Chicago wheat and KC wheat, and has gained on Minneapolis here over the last couple of weeks. And you can see by this chart right now, we're sitting about 30 cents off of the contract highs. Where the market has been led by, or specifically where the wheat market has been led by, is EU wheat futures, as they have pushed up near their contract highs with a big rally over the last week. This rally in EU wheat futures has come as private crop estimates out of Russia has lowered the crop there, and therefore it's bringing world cash values higher, giving support to this market. As we flip to a KC wheat chart, even though we got EU wheat futures right near their contract highs, you can see September KC wheat is trading around 30 cents off of its contract highs. We've had a decent push up in here recently. The question now is can we get a demand-led rally going a little bit further along? We've had a good rally on wheat. I guess our bias in here right now is try to find a place to sell a little bit more in the cash market. And our long-term thinking is the world doesn't raise enough $4 wheat, but probably raises too much $7.50 wheat. As we want to finish things up in here this week, and again, we just don't have a lot new to bring to the table in here, and we're not going to waste people's time. But what we want to set up here is looking ahead during the month of August. We think that there's some really important things coming up in here. And the first thing is going to be next week. We have our August USDA supply demand report. And where this report is extremely important is this is actually one of the first survey-based yield reports out there, okay, where the USDA is trying to get a pretty good handle on what the crop is like. That is going to be extremely important. I mean, our guess is that the USDA should keep corn yield the same and maybe even increase it a little bit upon what we're hearing from farmers. I know that's a little bit contrary to what the crop ratings are saying, but we probably trust the producers we talk to more than what the USDA is presenting on its crop ratings. On the bean side of it, you can make an argument either way. We would hate to guess. If you're just going to go on crop ratings, you'd say we should probably lower the yield down a little bit. And as we visit with producers, they just don't have the confidence in the bean crop sitting here the first part of August as they do on corn. The next big thing coming up is the following week is you're going to have the Pro Farmer Crop Tour and boots on the ground. And, just like the last couple of years, this crop tour has been important. It's going to be extremely important again this year to either confirm what the USDA is saying on this August report or put some question marks with it. Again, just looking ahead in here right now, get through this week, we think it's going to be fairly slow on the news front, but it's going to really pick up then the next couple of weeks. Then as we get past that report, we need to remember harvest is right around the corner. And then also you're going to have some seasonal pressure in here, when you do have harvest. So those are some things we have to keep in mind looking ahead. I think there's a couple of things, though, in the grain markets or in agricultural markets that could be big wild cards that really no one is discussing in here right now. and a concern for us. The one thing is the speculators. Right now, the speculators have a big net long position in the corn market. We wrote on a report yesterday where speculators bought, yet futures are down. If we don't get a bullish catalyst in here on the corn market, speculators have a big net long position in here. If they just decide to liquidate, we're going to get more pressure than what people would expect. On the other hand, when you look over at the bean market, their net long position right now is below the midway point of their net longs they've held over the last year. And so if there is weather to fuel this bean rally, you could really have the speculator step in here and buy this bean market to give us a push higher. So we think a big wild card as we look ahead in here right now is how do the speculators handle their positions. I think the last thing that's out there, and it may be getting talked in some circles, but it doesn't seem like it's being discussed much in the markets right now, is COVID. We're seeing some new mask mandates out there. We're seeing increased hospitalizations. I mean, do we go to a shutdown? I mean, that was just a wreck for the market in here, a year and a half ago. So, we think that this whole COVID situation, or with a Delta variant, whether if you believe it or not, it is going to have an influence on the market. The thing that bothers us with COVID, unlike the speculators, where the speculators, we can make a bullish or a bearish argument. If COVID makes more and more the news, it's very difficult to put a bullish spin to that on the marketplace. We'll look forward to being back here next Tuesday, and we'll probably have 2 of them out next week, as we do have that supply demand report then as well. But any questions, feel free to drop us an email. So we look forward to seeing you next week.